All right, welcome back, everyone, to the RLT Pivot Podcast. My name is Tracy, and I'm once again joined with my amazing co-host, Mr. Dan Jansen. How are you, sir?
Doing good. What is happening, Tracy Ball?
Another day in the markets, another day and just another day, period. How are you
Uh,
doing? You good?
Loving it.
Yeah?
Loving the markets. I love the sideways trading.
I
But
saw I saw you were crushing it earlier.
we were battling. We battled all day today. But that's the market. And I think it's perfect for this episode. So we're gonna bring a little emotion into this real life
Ooh.
trading pivot podcast today. So the entire episode is the role of emotions in trading, how to manage. I can't even talk. That's how emotional I am. How to manage your emotions effectively. So, Tracy, what? And I honestly, I think that a lot of people fail trading not because of technicals, not because they can't read the charts, not because they haven't spent the time, but I think their emotions sometimes get the best of them. Whether it's on one trade, whether it's on a couple of losing trades. How do you feel that people? Why do you think that is?
Why do I think that emotions affect traders, or why do I think
What?
traders are constantly are
No, why
affected?
do you think the market brings out so much emotion?
Because we're talking money. We're talking money. Money's emotional. It is. It's exciting. I mean, what other thing can you do where you can see money come into your pocket so quickly and also go so quickly? It's really, I don't think there's anything else on the planet that we do other than potentially gambling, but I don't consider stock trading gambling. But I don't think there's anything else that we do on the planet where we actually visualize and see money coming in and out all the time. It's always done in the background. So when we're working, when we're running a business even, we're not seeing the money flowing in and out until we check our bank accounts or until we check our books later in the month or at the end of the week or whatever it is. It's just it's too tangible. We're right there with it. And I think that's why it really gets a grip on us. And we have so much invested in it because the reality is there's not a lot of stuff we can do these days that doesn't require money. So money may not be your goal, but you need money to achieve your goals. And that's what draws out the emotion, I think.
Yeah,
What are your thoughts?
yeah, no, I agree. I think I think the path to success, and it's very hard to do when it comes to emotion, is to stop caring about the money, whether you win or lose.
Mm-hmm.
If if the person trading is focused on trading, number one, their plan, and number two, what the charts are telling them, I think that they have a much higher success ratio. They take the loss as a win, right? They're
Mm-hmm.
like, it didn't work this time, but I know I have a track record. I know, and a lot of it comes from being in the markets, having the screen time, doing it over and over again, and understanding that. And I think Tony said it once on when it was live once or during one of his classes, but he said that no one trade should determine your profit and loss for the year, right? You should not your entire year should not be made on one trade.
Mm-hmm.
Whether you win or lose, fantastic. All you are is you're ready to take the next trade. You're ready to find the next setup that fits you, right? And I think that people that dwell on the emotions of a loss or a win have the ability to, and I think the odds increase that they're going to maybe take something or do something in the market that is not really fitting their plan. So
Right.
even if we talk about the wins, I mean, you get really excited. You're like, man, I won. I want to get back. I want to do something again. Keep me at the roulette table. And the longer you stay at the roulette table, eventually the market will get you. And a lot of times you could go back to those trades after the wins and say, is this still really a trade that I would have taken had I just started the day?
Mm-hmm.
Right. And
Yeah.
same thing with losing, I think, and the losing will bring it out more where now you have to revenge trade. You have to get back on the horse. But why?
Yeah.
Why today? Why at this moment? Take a breather and just control yourself.
I honestly think that emotions are instinctual. So we were ingrained with emotions because emotions create that fight or flight. That tendency that's inside of us. It instigates that fight or flight. And whether you're in a relationship or whether you're, learning something new, or whether you're even eating dinner or watching TV, there's an emotion that's attached to that. We feel something, right? And as we grow, as we become older, as we mature, our emotional intelligence grows too. And when we come in contact with new things like trading, for instance, it's important for us to develop that emotional intelligence, because it's not at the same level as we may have it for other things in our life, because we haven't had that exposure. We haven't had that ability to develop it. And so I think that that's an instinctual thing. It happens to all of us naturally. And I think the difference between a seasoned trader versus a new trader is the seasoned trader has had more time to work that emotional intelligence and grow that emotional intelligence so that it is not ruling your life, right? And that takes time. So even you, Dan, myself, we are affected by our emotions daily. I feel it. When I enter a trade, I still feel that exhilaration. When I lose, I still feel yucky about it. I don't like it. It's not something I enjoy doing. But as you said, it shouldn't define you. It shouldn't define your year. It shouldn't define your month. It shouldn't define your day even. And that's where we want to go. And look at relationships. How many people here remember when you were young and you were immature and you hadn't had that experience yet, your first love, and it felt like the world was going to end when that relationship just severed, right? You couldn't imagine ever loving anyone else ever again. Now, I've been there. I don't know if you guys have all been there, but it felt so life-altering. Now, I'm almost 50, and that feeling doesn't happen anymore. Those relationships don't define me. Whether that relationship succeeds or whether it doesn't define me. And that's really, it's no different with trading, right? It's exposure. So, yeah.
I think the word relationship is a very interesting one, because you're relating it to people, but realistically,
money.
I think it's the relationship to money.
Oh yeah.
Right.
Yep. 100.
It's the feeling you get. Like, if you have money, you feel great about it, right? If you don't have money, you're like, why? Was there something wrong with me? Did I not do it correctly? And just, it causes a little self-doubt, right?
Yeah.
It's I mean, everything after you said, remember when you're young and immature, that you lost me, to be honest, because I'm not young. I'm just still immature. So I was like, now I'm confused what you're getting at here. But no, I get it though. I think that the if you have a whatever $500 or $1,000, right, and you go to work and you lose that $500, $1,000, whatever your R is, you feel a certain way, right? And it's whether you start blaming yourself, you blame the market. Why is somebody so focused on blaming anybody? Right? That the fact that you're holding on to some kind of blame, if you're down a whole bunch of money from trading previously and now you're taking a different turn, you're trying to understand things a little bit different, see the market a little different. Don't hold on to the fact that you're down money, right? That your previous trade didn't work out. What happened in that trade, and why are you down so much?
Mm-hmm.
Most likely it's probably because you had some kind of emotion to begin with, right? You're like, it will come back. I don't have to worry. The market's going to bounce. And then all of a sudden you're what we call the bag holder, right? You're holding a lot of stocks and your whole portfolio is red. And every time you see one green one go up $5, you're like, oh, I got to bail on this one. And you're missing out on the gains, but your entire portfolio is just a bunch of red, right? It's a sea of red.
Yeah, for sure.
And I think even the emotion for the aspect of day trading, I tell people I'm a big proponent of the long term, right? Have the long term portfolio, but have a separate account.
Mm-hmm.
I mean, yeah, somebody could manage to day trade inside their long and just be like, okay, I'm not gonna. But if you wake up and the market is red, and the first thing you do when you wake up, you check your phone and you're like, oh, man, I'm down. I'm losing money as I woke up today.
Mm-hmm.
Just that emotion in your bringing that into a day trade, it's going to affect how you day trade, how you want to see it, because now you just want to battle back to your long-term portfolio. Your one portfolio is even or flat, right? It's different when you have that separate portfolio. You wake up, it's clean. you close out all your positions the night before and you're ready to rock, and you kind of control your emotions. And now you start to worry more, or not worry, but you start to look more at what the candles are telling you, what the volume is telling you, what the sentiment is, as opposed to what your sentiment is, right? Of I just need more money.
So that's what I was going to ask you, because we've been talking a little bit about why and the fact that all traders do experience emotions, but let's cut to the meat and potatoes here. And I get so frustrated when people say this is where you need to be, but they don't tell you how to get there. And so you've just offered one piece of advice, which is, keep your portfolio a little bit separate so you're not paying attention. If you're day trading, stick to your day trading. Don't open your long term. If you're swing trading even, set some alerts of when you should be checking your swing trades. Maybe it is daily that you need to check your swing trades, whatever it is, but put that in your plan and keep it separate. Focus on day trading when you're going to day trade and don't open the other accounts. But that's easier said than done. So what are some of the things that you do to get your mind right and get that ability to have the strength, that ability to resist the temptation of opening your long term, getting excited about it? What are some of the things that you do to do that?
Don't get me wrong. I do open my long-term account more than I should.
Okay.
Right. I'm curious. I just need to know things. Right. And I also want to see, number one is, that's a good way to tell what people are doing. Right. So if I'm looking at a position in my account and I'm all of a sudden I wake up, they had earnings and I'm down 20% in a position. Yeah, that sucks for the long term. For me, I put it into a different compartment. Right. And it took me a little while to get it there. It's not something that you just build overnight, but I have the ability to look at the long term and just understand. I don't care what the current quarter is. If it's good, bad, indifferent, right? I don't care that a CEO stepped down in the long-term portfolio and somebody else is taking over and the market's moving because of that.
Mm-hmm.
I understand that my plan of buying the long-term is for at least minimum 10-year hold, and I know I'm not touching it regardless for me, right? So I know that, but I will look at my long-term because I'm like, well, I know, number one, not everybody has that position because of a long term. Somebody got in for different reasons. They got in at different times for different scenarios. And somebody's either losing or winning on a certain trade and somebody else is feeling a certain way. So now I could day trade that stock. Right? I have no problem going into my day trading account and just being able to understand the emotion of what it is. I know for me, it's just, I've already numbed the pain, right? Because it's a short-term pain. It's a pain that I'm feeling today because I'm like, oh, my stocks are down. But I also know, like, hey, I've got more money coming in next month, just part of my long-term investing plan. And if I liked it at a certain price, I probably like it a little bit more now, and it's a good buy opportunity. So I'm actually happy, right?
Yeah.
So that would be the one thing, is just make sure that you had the plan of getting into a stock, whether it's for day trade, swing trade, long-term investment. Understand why you got in, and just don't get that twisted, right? Don't start day trading because your long-term is down. Don't. Just understand, okay, that's my investment. I'm building wealth there in that account, but I'm trying to build income here. So great. What's my income play, right?
Yeah.
How could I make money whether I touch that stock or not? What's a good move for me, right? And it just kind of coming in with that clear, level head that will allow people to start to break the emotion. And the other biggest thing that myself, I don't, you might be able to teach it. I don't know. I haven't figured out how, but it's putting the time into the market and understanding that it's a process and there's a thing called progression, right? You just building a half hour a day, it will get you very, very far in the course of a year, 2 years, 5 years. Where would that bring? You don't have to have monster wins, right? You don't have to just absolutely crush every trade, but having that progression and seeing it build, that takes a lot of the emotion out. And I think just kind of understanding, like, even the highest paid people in the world, right? Even if you look at the NBA, there's a lot of people getting paid lots of money. They don't get paid lots of money because they're them, right? They get paid lots of money because they put the work in. They got really good at doing something, playing basketball, playing football, building something. They spend their time on that, worrying about that, and the money comes because of the effort put into creating something that you're good at.
Yep.
Learn to read the charts, learn to read the sentiment. If you have certain strategies, go back trade it, spend the time, spend the hours. Jeremy said before, you don't make money trading. You make money on all the work you do before it. the trade comes from the aftermath of you learning that process.
Like everything, right? So no different than becoming a doctor, a lawyer, a dentist, whatever it might be. Now, there's a couple things that you said there that are really key, and one of them is having a plan. So having that plan is definitely going to help you with the emotions. It's going to keep them in check a little bit. The second thing that I wanted to identify, at least with long-term investing, is when you are getting into a long-term investing strategy or whatever you're doing, and you're most likely looking at a daily chart, a weekly chart, or a monthly chart. You're not looking at an intraday chart. So when you're checking your accounts, stay on the daily, weekly, monthly. Don't zip into an intraday chart, because when you start to dive into those small incremental moves, that's when your emotions start to kick in, because you're actually telling your brain it's okay to convert this long-term investment strategy into a day trade, and you switch gears from investing to trading, and that's not a good thing. So keep the perspective of what that investment is, and so keep that zoomed out portfolio. Look at the bigger picture, because that's going to ease those emotions when you look at your portfolio and say, ooh, it's down 10% or it's down 20%, but you look at it from a big picture and you go, oh, but it's still bullish. It's still on the direction that I want it to go. It's just pulling back into whatever support, right? You can ease those emotions, but if you start to micromanage it or look at it at a micro level instead of a macro level, those emotions are just going to stir and stir and stir. All right. So now the next thing that we should talk about more is actually controlling the emotions intraday when we're actually day trading. So one of the things that I did want to highlight was emotions. Emotions take, well, if you want to stop, I don't know if you guys know that emotions trigger what's called the amygdala, which is a little part in your brain that creates that fight and flight response. Now, it takes 5 seconds to snap out of that amygdala, to get that amygdala to stop controlling your thoughts and allow rationality to kick back in. So one of the things that you should do as a new trader is, count to 5 before you make any kind of decisions. Just do whatever you need to do to cut that emotional stimuli away from you long enough that you can calm down. If that means that you have to stand up, walk away before you come back and look at the charts again, then you do that. That resets that fight-flight response and gets you thinking with rationality again. And that's a conscious choice. So do something that you need to do. Whatever it is, put it in your rules, put it on your computer desk, put it as a sticky note on your monitor, whatever you need to do to remind you that, hey, I need to take a quick 5-second break just to snap out of this emotional state that I'm in, particularly after a loss. Okay? After a loss, you need to stand up, get away, just walk away. Even for 1 minute, that's long enough for that emotional response to stop. Okay, that's one of my tips. Do you have any tips for intraday when you're dealing with emotions?
In terms of intraday, what I would say is I'd be on the same page with you as far as take that step away, take that deep breath, and try to same thing with the post-it note. I mean, I think you said it so well, but try to understand, like, again, the next trade you take, whether it's a win or a loss, doesn't necessarily impact your trading career at all.
Mm-hmm.
Right? I think that next revenge trade, I think the next, I just got to be in something else. And I think there is a common belief in the market that if I'm wrong, somebody else is right. So maybe I should switch position. There's a herd mentality, right? And you see it all the time in the market, that where, okay, I was wrong, everybody else is right, so let me just join that team now, right? And you can lose twice in the same trade just by just by flipping position. I mean, you have to. I wouldn't even say I'm a great. I know Jeremy could flip positions very easily and do that. For me, it's just not my specialty. If I'm like, okay, this is my sentiment, this is what I think should happen. Yeah, I could go ahead and flip positions, but now I could also lose 2 hours on the same exact trade because maybe I was right the first time and I just was the wrong time, right? And it just, everything will come. The longer you stay in the market, the more money you will eventually make, right? And people just look at those P&Ls and go, I'm down today, I'm down this week, I'm having a bad month, I'm not getting it. How long have you been 3 months? You've only been in the market 3 months.
Yep.
Relax yourself. experience comes with having the screen time, right? And that I think affects day trading, swing trading, long-term investing.
For sure. I'll tell you, it happened to me today. So I tried going long on the ES. I was playing the ES minis. I tried going long 3 times this morning at the level that I wanted. All 3 times I got wicked out because it just took me a little bit longer. Very small losses. I finally said, okay, well, maybe this isn't going to work. And I'm right at a level. I have this level that I've marked. I know what I'm looking at. And it's like, okay, maybe it's going to break down. So I go short. And immediately it flips and goes the other way. So I'm down 0.8 R for the day. 4 trades in the first 45 minutes of the day. I turn my computer, or I walk away anyway, come back, and I jump into another trade, and I nailed it for 3.36, and it was another long trade, but I had to just keep those losses small. I knew what I was looking for. I stayed calm and cool. I did try and flip that script because I'm thinking, okay, well, maybe I'm wrong. Maybe it's going to go the other way. And it just didn't. And I know where my levels are. I made the correction really quickly. And then as soon as it did break in the direction that I wanted, I jumped in, didn't hesitate because that was the initial plan that I had anyway. And I knew that level, if it could fail, it was going to fail hard. And if it could go long, it was going to go long nicely. So that takes time, right? But some of the things that you have to do in order to be able to do that is, first of all, recognize that there's a buyer and seller in every market. And just because the buyers may be more powerful, the market buyers might be more powerful than the current market sellers are right now, or vice versa, and you're in the weaker group, doesn't mean that your rationality is wrong. You just might be poorly timed, or you might be looking at it from a different perspective, or the wrong type of traders are currently in the market at the moment. So an example would be if you're thinking the market needs to retest, or you have an idea that it's going to go lower, but it goes higher, that could be that it could still go lower later on. You don't know, but those traders aren't there yet that are going to bring it. It's a different time frame that's currently in control of the market, and that's why it's going in the opposite direction. So you have to eliminate the idea of being right or wrong, because that creates another emotion inside that is really difficult to deal with, because that's our personal pride that's getting affected. That's our personal worth that's being affected. And that creates an instinct in us to fight back, because no one wants to feel like we don't know what we're doing. No one wants to feel like we are bad people. We don't want to feel those emotions. So, you have to be able to separate that idea about being right and wrong. So you set up a plan. It's a probability. It may or may not work. End of story. It's going to take some time to develop that. Now, one of the other things that I do as well, and this is just as a new trader, to develop the skill of detachment. And I actually turn my broker off. I actually click that little X button. I shut her down after every loss, because that forces me to restart the computer or restart the software that I'm using, which takes time, which gets me out of that revenge trade or that desire to revenge trade. So that's another tip for handling those emotions. And like I said, the more you trade and the more you see the successes and the losses and all that kind of stuff, the more you will get better at it. You just have to practice doing the right thing. If you are constantly practicing revenge trading, you're just reinforcing a bad habit. You're practicing a negative habit. So you need to set some kind of rules or a system in place right now that keeps you from actually engaging in those activities, right? Because that's the muscle you're building right now, is revenge trading or FOMO trading or anything like that. So, what are your thoughts about jumping in with just 1 or 2 shares to deal with FOMO? Because I have my own thoughts on that. What are your thoughts?
I don't mind it, because you're going to lose very small, going to win very small. Mm-hmm. For me, I almost rather not, to be honest. I understand why people do it. I see the value in doing something like that. I think it still encourages you to still be in a trade. Mm-hmm. Right. And I think it still kind of reinforces the aspect of I need to be participating in the market. I think the more difficult thing to do, and I think it's the better move, is be okay not being in the market. Do you know how hard it is? And this is a question for everybody. Give it a try. How hard is it to have your screen open, watching stocks, and not trade something? That is the most difficult because you just want to be in the action, right? And I think having the ability to just kind of have that discipline will go a long way in trading, right? I think when people will start to realize that, you know what, I don't have to be in every single trade. I could sit out and I will probably end up making more money being more selective. You could go a week or two, and if things are just not lining up or you don't see the trade, yeah, you're going to get that FOMO. You're going to feel like I'm missing out. I feel like I'm doing nothing. I'm just watching these charts all day. But it's not about what you do today. It's about what you do for the year. It's about what you do for the next 5 years.
Yep.
And just having that discipline to be okay just not being in a trade at all, right? And I think that is something that I've learned over the course of the whole bunch of years of just trading and doing this. And I had to be in something all the time, right? And I was like, how come I'm having good trades, I'm seeing things correctly, and but am I really seeing things? Am I stepping back? Am I looking at instead of a 1 minute chart, am I looking at a daily chart? Do I really know where we're at on this certain stock? And I think that helped me to be like, well, the daily is not where I want it to be. Why am I in this thing in the first place? Why am I even trading a stock that's just inside day, just moving around and just to be in it? Like, I just want to be part of the team, right? And realizing it's better just to do your own thing. Don't listen to the crowd. Don't listen to the Jim Cramers hitting the sell, buy, getting the emotions running, the adrenaline running. You're like, I got to do something. This is the market. This is your financial future. This is where you took your money that you've traded hours of work for to get. Be cautious with it.
Yep. And I'm going to give another analogy. So it's analogy time by Tracy. All right. Imagine yourself at the gym and you're working out and you're lifting weights and you're doing it with poor form. So you decide, well, I'm just going to do lower weights and I'm going to practice. I'm going to keep doing this with poor form, right? What happens when you start to actually lift weights with heavier weights and heavier weights? You end up getting hurt. You end up getting injured. And as far as I am concerned, trading, when you are supposed to stop trading because either it's in your plan or it's you're feeling emotionally compromised or you shouldn't be trading, by you going and doing the act of, putting a couple shares into a trade because you don't want to be dealing with FOMO, or even if you start paper trading, as far as I'm concerned, you're not practicing the right thing. You're practicing poor form. You're at that gym with lower weights, lifting, doing your bicep curls with really poor form. And the minute you go back to doing things the normal way with proper weights, lifting what you're going to normally lift, you're going to get hurt because your form is bad. And what you practicing is practicing, but how you practice and what you practice is great. Someone once told me that, and I'm sure you guys have heard this before, that practice makes perfect. And my next door neighbor, his little granddaughter used to say this to him all the time. And he used to turn to her and say, no, perfect practice makes perfect. And that's the difference. So you can practice something all you want, but if you practice it wrong, guess what? When you execute it, you're going to execute it wrong. So dealing with emotions, I think, is no different. You have to set up some safeguards and practice it the way that you normally would in a real scenario, the way you want to practice it as a professional trader, the way you want to be acting as a successful trader. Emulate what you want and do that. So like I said, you need to set up some parameters. You need to set up some tips. I've given you a couple. Dan's given you a couple. You need to start exercising those. And as you do that, you are going to be practicing and building the muscle for dealing with emotions because, yeah. I even have in my trading plan, I have a little checklist that I go through, and that checklist tells me whether or not I'm good to trade or not to trade. And it gives me a caution or it gives me an okay to trade. And even if if everything's going well, I'm succeeding at everything, I can still get that caution to trade because now I'm overconfident, I'm over exuberant, I'm on the other side of emotions that I need to be aware of. So I have that little thing that triggers me and says, hey, no, maybe you're compromised, or no, you shouldn't be trading. And from there, it's my responsibility to be accountable and actually act on that. And that's where I'm at. So anyway.
Yeah. And again, it's always good if you're going through that. If you're finding yourself making decisions based off of emotion way too much, number one, lower the R. I've said this a lot of times. It's helped a lot of people just kind of recuperate, build that confidence, build the holding muscle, as you talked about, and just take that next step forward. Like the path for the rest of your life is right there in front of you. All you got to do is just walk it, right? Yeah. And sometimes we just get so caught up with what everybody else is doing, how many R's somebody else is making, how many talking heads on TV saying the market's either going to skyrocket or crash, or nobody knows what's going to happen in the market, right? I hate to break it to everybody. Not a single person knows what is going to happen in the market, right? It's wild. The market will stay irrational, right? And you could have a certain, hey, this is the exact spot I think is going to move and bounce. And if it doesn't, and you're trying 30 times and you're getting frustrated, just because you have a target, just because you have a certain spot that you think it's going to work, read what the actual chart's saying. What is the volume saying? What is everybody else in the actual market putting their money on the line saying about the market, right? And just it just understanding that don't get too, just because you lost a trade doesn't mean you're just a horrible trader. It just means that trade didn't work, and give it some more time, take the breath, maybe comes back to that spot. You notice a little bit of a better setup around there. You start to see that maybe the bulls are starting to weaken a little bit, or the bears start to weaken. And now you have a better opportunity to take advantage of it. If your trade doesn't come today, tomorrow is a brand new day. Tomorrow you will have the opportunity to wake up, look at the markets, reassess, take that deep breath, and just be able to say, you know what, my assessment is now this, because I think I have a little bit more information from the market that the market gave me, and I have a better case for my position as to why I should be bullish, bearish, or where my entries or stops or targets should be.
Mm-hmm. Fair enough. Completely agree. And Dan, I think we're out of time. It's been a pleasure.
I don't want to be out of time. I don't want to be out. I'm going to keep going. But we do appreciate all of you guys each and every day watching and viewing our videos. Keep in mind, we do have links below. You can check out Real Life Trading and a lot of the free education videos that we have here at Real Life Trading, RLT. Tracy, always good to be co-hosting with you. And we'll catch you guys all on another episode of Real Life Trading Pivot Podcast.